Welcome back, guys. This is Frank Rizzo. With me is my co-host Eric Busatel from the Mobile Home Park Exchange, and we've got a quick market tip for you that we think is extremely important right now. As we're looking down the pike, there's a 24-month tsunami ahead of us. 1.3 trillion. That's trillion dollars of commercial real estate loans that have to be reset over the next 24 months. These are loans that were taken, when rates were 3, 4, 5%. They're going to be reset over the next 24 months, and what that might mean for you if you have to refinance or recast your loan on a mobile home park in this current environment. And mind you, 80% of those loans are currently with regional banks, and most of the loans in the manufactured housing space are with regional banks.
Frank, this is not only about mobile home parks financing. This is about any commercial financing is going to have the same issue that you're speaking about.
Correct. And, Eric, you've been in finance for over 20 years. I know that you just had a loan close recently. What rate were you closing at?
So right now, a 5-year fixed on a commercial mortgage trending between like 7 and 8%, right? And anyone who's purchased commercial properties over the past 5 to 10 years, your initial terms are typically a 5-year fixed, a 7-year fixed, or a 10-year fixed. That $1 trillion worth of commercial mortgage coming due, these are individuals that probably put as little down as possible, and cash flow is how they come up with what type of loan amount you're going to get. And now that these term loans are coming due, and they're going to be entering an adjustable rate period that's going to be higher than the number that they're at, probably get them into the 7 and 8s or even 9s, and people are going to have to figure out a way to refinance. What they need to do is, if they know they have something coming due within the next year to 2 years, they need to speak to a professional now and start planning, because you could look at your loan and figure out what kind of loan a lender is going to give you on your property based on your cash flow and the interest rates right now.
And if your current rates, and we're just going to use a blended number from what you said at 8%, you probably have to underwrite your property at a 10% cap rate to ensure you have your debt service coverage ratio covered. So if you're not underwriting to a 10% cash flow, or if at that number you have to do a cash in refinance, you have to see what your options are now. Do you have to bring in additional capital at that refinance? Do you have to bring in a partner or maybe some equity to kind of buy that down? Or do you have to look at some other strategic alternatives? The time to do it is now, not wait till your loan is due, because that can force a lot of other serious actions.
Absolutely. Especially if you still have a good positive cash flow now, right? You maybe have been using that money, but maybe now you should be saving that money and figure out how much you may have to come to the table with when you go to refinance, and start setting that money aside now rather than waiting, 3 to 4 months, which is, when someone typically starts looking at that. If you're a couple years out, you got somewhat of a head start. Start looking at what you're going to need to bring to the table if you want to keep that property. And if you're not going to be able to come to the table with funds, what are you going to do? Are you going to sell the property? That's going to be an option. And I think that's where people are going to start having to really make an analysis of what they're going to have to drop their property prices to, because that next buyer is going to have the same issue that you did.
That's a great point. If you have any questions on this or you want further information, reach out to us at themobilehomeparkexchange.com. We'll be happy to answer your questions and see if you need an analysis on your property, what that's worth and what the bank may be looking at. Just another tip from Eric and Frank at the Mobile Home Park Exchange. Thank you.